Now, what to do with this one? CBG, another pick from Diggin, Norway, miners, TSX Venture, probably a junior gold miner. And check out this guy, man. 2013 monthly candle chart, IPO, down, 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 down. Oh, you see those wicks? That's price action on smaller time frames. But the market, you didn't know back then, nobody knew, but it's starting to establish some monthly defined resistance. A few years later, try to make another go at it. The long wick, sellers coming in, gap up, all the way up here above the sky, and I'm going all in. It's above. No, sellers coming in, close, needs more time to marinate, back down below a declining 12-month moving average until recently, where you had to close above. It's starting to incline the 12-month moving average, and right now we're hitting monthly defined resistance, or we're defining it a little bit more. So this are my bigger boundaries. This is my implied measure move. Of course, I like better when there's a lot of tests before a breakout closer to the breakout line. But I still like doing the swing rule. See if my target has any hiccups along the way, but there's not much history for the chart. So if we get back above these levels, and I'll take the higher one here where it gapped up. Where it didn't gap up, but it closed all the way up here. That, if we close above that level, monthly defined level, then that'll be my measured move. Will I trust it that much? I'm far away from the 12-month moving average. It would have been better if it closes above. Maybe we're going to wait for the pullback, and the more 1, 2, 3 months, the more months we spend, we could let that 12-month moving average, and then we could test that monthly defined resistance during support, and then we could take half position here. So you need that. You don't want to go parabolic now. You want a nice strong base, nice tight launching pattern where you're very close to those support levels, very close to that 12-month moving average, and you get to use those as a low risk environment because you're going to put yourself down below that. You'll be secure that that resistance is going to protect you, that support is going to protect you. But right now, buying here, no man's land. There's a whole big way down here, so super dangerous. But it's shaping up. This is the target. If you're looking at bullish targets, then that's a good stage, a good sign for stage 2. Weekly chart, we have to drill down because the price action happens so fast, outperforming the SPX, but really, JD, it could be almost the same, but we want to see if we're outperforming the gold miners, and we are, the juniors. Already some signs that something was brewing, guys. Even this one, look, twice the average volume in the previous 4 weeks. Somebody buying, contract, buying, and this one, this was your breakout right here. This could have been a stand confirmed breakout above Ichimoku cloud, inclining through average. How do I know that? The green overlay. This had pretty much signs of a big winner. The volume could be low. 1.4 million, and it had the week before 92k. Wow. Look at that green volume. But you see the wick, and when this is starting, you want to make sure you got the best of the best, because if the price action closes just a little lower, you get a red candle, red volume, you say, it's crap, the people that bought here, they sold everything. So I'm going to put my little marker right here. We're going to come back and we're going to look at the details of that weekly candle. I want to see if the green volume was a nub day. It was, but there's still a wick. My thing's hiding it, my little marker. I want to dig some more. I want to see. Let's go to 4-hour chart. So most of that green volume is still on that candle, contracting volume, on smaller contracting volume on that pullback. But there's still a little wick. And let's dig in just a little bit more. and then you see green. So a lot in the first few hours, first 2 hours, breakout, everybody was doing their buying. Strong hands, nobody sold into that or lower quantity of volume, but this is the energy you need for initial thrust to bring price action in stage 2. So I call that the first breakout, the embryonic breakout. Stan always says 40-50% move off the lows before you actually enter, and it's normal. You want the price action to go up. You want to start dragging that 30-week moving average up. Look, we're flat for a long time. This is your trend. This is the momentum. So you want to be above this. So right now, it's like baby steps. These 1, 2, 3 weeks that you're above an inclining 30-week average, it's just great. Now you either wait for a pullback to that 30-week average on contracting volume, and that's hopefully your entry if you can get back down here. And it just popped. Look at that. Boo! That's one day. So that's Monday of this week. Again, we could look at the volume. There's red volume, but that could have been the case here. There's that wick that goes up. So let's go see that volume. Is that people selling into this? Gap up, red volume right there. Still the wick. Let's see how the day panned out, the distribution of volume. Good green volume on the opening hour, but a lot of red volume on that candle. Let's zoom in just a little bit more. And look at that. Most of that green volume on that up, still holding it. And then contracting volume on those following candles right there. So not that bad. Still some strong volume. But the volume's contracting and we're still above 20 cents. Will we get a low risk entry? I don't know. You'd have to come back all the way down here. So maybe this is gonna, it could, I don't know if it's gonna go all the way back here. Then probably you get a good entry. But that's what happens when it explodes too much. You want kind of a sleeper move. You want nice, strong breakouts, sleeper moves, not too far away from 30-week average, not too far away from 12-week average. Very delicate. You can't go long if you're starting to underperform. Well, that is, let's go back on the weekly, guys. So you probably want to pull back, and then after that, when it starts going back up, when you start outperforming the gold miners, your peers, but are so far away from the 30-week average, guys. So this is pretty up, pretty healthy. The best entry would have been just a little while back, but you'd have to be fast on the trigger. There's no way to know this could have happened. Sometimes they pan out that way. I just want to see the monthly chart. So yeah, the monthly chart right now, let's wait for the end of April. Maybe it's not going to close below. So if it doesn't manage to close above that monthly defined breakout line, maybe we will see on the smaller time frames a couple of weeks. Let the price action either go sideways or slightly down and give us a better low risk entry, a little lower here. And then after that, we could ride it all the way back up to that monthly defined resistance and see if it goes out. Or the other scenario is you just wait for it. Wait for a monthly close above, let it pull back, and then I think this would be a stronger move. You'd be above that monthly defined resistance, so you'd be playing the bigger picture. Would be a nice ride up on the monthly candle chart. So I think those are both scenarios that I'm envisioning right now for CBG. No clear-cut entry right now, but man, nice breakouts on those miners, guys. Something's brewing.